There's biblical principles to money that's extremely valuable, and they work. So we just try to have that as our underlying theme. Any thoughts on that for you guys, or what's your opinion, or what's been your past experiences about it, about investing?
No, thank you so much. This is Deanna for sharing your story. And you are so exactly right in regards to the manipulation part of it. And unfortunately, when you go in and you're blindsided by what the media is presenting, it really is in their favor and it's not in your favor. So if you don't have the proper education and understand the whole risk management part of it, you will lose out big time. So the fact of the matter that you guys took out the time to make the investment and educating yourself and understanding the market, because I myself, I'm a real estate agent as well, and I do that part-time, but this part of it can be challenging because you don't know who's trying to take you for a ride. But I personally know who you guys are. So when I learned that you guys were investing your time in regards to the efforts of teaching, definitely wanted to be a part of that. So thank you for your stewardship and making yourselves available to teach from this perspective. Thank you.
Oh, you are so welcome, Deanna. And I love you. I love your family and everything. So I'm so glad you're here. We miss you guys.
Yeah, absolutely.
If you were talking, Trey, you're muted. So
I said we got everything up and running now. So okay. Yeah, so Joyce did a great job on kind of giving our background. So so we've learned from we've been, fortunate enough to learn from Wall Street traders, people that have actually worked on the floor of the Chicago Mercantile Exchange, the SIBO, places like that. And it's no trading pits anymore. So now everyone is forced to be screen traders. So these guys that we've actually paid a lot of money to learn under these mentors that have taught us, the behind the scenes. And that's kind of what we share with you. So we trade stocks, futures, Forex, options, cryptocurrency. We trade all of the markets with a different understanding of the markets than the typical person will have. So now Joyce is really awesome because the psychology part of the markets, that's really what we need to deal with, is the psychological part of it. It can become very, very emotional. So we have something called the bite of wisdom that Joyce does every morning for us. And she kind of helps us get our mind right. So she's going to kind of give you a quick sample here of the bite of wisdom. So Joyce, go ahead with the bite of wisdom.
All right, you got it. So the bite of wisdom, again, is just a really short, we call it our morning smoothie because we like to be healthy in our trading group. Being a great investor and trader, you need to be strong mind, strong body, strong spirit. So we believe in a holistic style of trading. And so we just like to start our day off before looking at a bunch of charts, just having our mind right, because people that are familiar with trading and investing, it is a mental game. You can learn the strategies, you can learn the platforms, you can learn all that stuff. But unfortunately, we have these bodies with us until we don't. And these bodies make us wrestle with our emotions and our psychology. And trading can surely take you on an emotional roller coaster. So today's bite of wisdom, we're going to be talking about probability. Because at the heart of the matter is the fact that when you start trading and investing, some people have that need to be right all the time. They don't like to lose and they don't like to be wrong. And overcoming that obstacle can be one of the hardest, if not a lifelong journey, because the reality is, do we know exactly what the market is going to do and when it's going to do it? The answer is no. So my question that I would want to ask and have you guys think about is, how do you personally handle uncertainty about being right or wrong about anything? And does uncertainty ever stop you from making important decisions that you absolutely must make, whether you know what's going to happen or not? And that's that great, that duality, that tension in trading and investing. And the thing is, you can have all the training you want and reading trend and price charts and doing your research, which is great. But the bottom line is we ultimately don't know what the market is going to do and when exactly it's going to do it. So there actually takes a measure of faith, right? It takes a measure of faith to actually execute trades and execute your trade plan. But what do we have our faith in? Do we have our faith in these banks, institutions? Do we have our faith in what the news tells us, what that hot stock tip tells us, what rumors tell us? No, for us personally here at Knockout Investing, we put our faith in technical analysis because the price charts ultimately doesn't lie. Can the news lie? Yes. Can even earnings reports be manipulated? Yes. So we like to go off of price action. What historically has this particular stock or ETF, or even whether it's futures, options, Forex, cryptocurrency, all of it has a price chart. So you can actually see historical data of what this particular asset has done in the past. So technical analysis, according to the CMT Association, is defined as the study of data generated by the action of markets and by the behavior and psychology of market participants and observers, primarily through the use of charts for the purpose of forecasting future price trends. So are we trying to create a crystal ball? Do we like to tell other traders and investors in our group, hey, we can predict what the market's going to do. We're going to give you buy and sell signals. We're so against that. It's not even funny. We don't like to give fish. Our job is to teach you how to fish because that's what we sought to do. There's a lot of other groups out there that definitely just kind of want to feed people buy and sell signals. But then again, you're left dependent upon that person, whether they're right or not, right? And we like for people to take control of their finances, take control of their future, and learn how to read the price charts for themselves to make the highest probability trades, right? I love this quote by Jordan Peterson. He says, if you're not willing to be a fool, you can't become a master. The first step is admitting what we don't know, right? We don't even know what we don't know when we first start. It's actually easier to train people who's never invested in the financial markets before than people who's been doing it for 10, 20 years, because they probably have a lot of erroneous thoughts and bad habits, bad risk management that needs to be purged and gotten rid of before they can actually take on good, solid, clean chart reading and good risk management strategies. So it's a humbling thing to admit that, hey, I've been doing this for 10 years and I still couldn't tell you exactly what the market's going to do tomorrow and what it's going to do, when it's going to do it. We don't predict tops and bottoms. That's just not our business. It's not our job. But you will have mastery over being a trader and investor, but first admitting that we really don't know what the markets are going to do. I love Mark Douglas. If I could say this is required reading, just like in college, your reading list is Mark Douglas books, one in particular, Trading in the Zone. And he says a probabilistic mindset pertaining to trading consists of 5 fundamental truths. The first one, anything can happen. Just because the market did this in the past doesn't necessarily mean it's going to do that in the future. And just because you had this success in the past or failures in the past doesn't exactly mean that's exactly what's going to happen in the future. Really, anything can happen. We do not have complete control. And we need to surrender to that, embrace it, have a set of rules that are predictable and are consistent over top of an unpredictable market. And we need to make peace with that. Number 2 is you don't need to know what's going to happen next in order to make money. The thing about probability is you're going to have wins, you're going to have losses. That's just the heart of it. That's just what it is. It doesn't matter what strategy you have, you're going to have some wins and losses. But as long as the net is profitable overall over a series of trades, now maybe it's 20, 30, 40, 50 trades, depending on what kind of trader you are, small time frame, large time frame, and so forth. Overall, you should be net positive if you have a strategy that stacks odds in your favor over time. So we get into that with strategies in our group. Number 3, there's a random distribution between wins and losses for any given set of variables that define an edge. And what does that mean? Well, it's kind of like if you take a quarter and flip it 100 times, how many times is it going to be heads? How many times is it going to be tails? Statistically, about 50-50. Now, for the first 5 flips, do I know if they're going to be heads or tails or not? No, I don't. And the reality is, every time you take a short-term trade or even sometimes a long-term investment, you don't know if this is the one that's going to work out or not. It's a random distribution from trade to trade. And that's why we really stress to take that time when you're practicing to take a series of a big set of trades, a nice group, to have large enough data to see whether or not, if number one, your strategy is working for you, and number two, if you're actually following the rules of your strategy and being disciplined. Number 4, an edge is nothing more than an indication of a higher probability of one thing over another. There's many different strategies out there, guys. For us, we focus on pure supply and pure demand, which is basic law of economics 101. And we just know how to look at a chart and see where there's a high degree of probability where banks and institutions are buying and selling. And so for us, the little guys trading our own personal account, I want to put my buy order wherever the banks are buying. I want to put my sell order wherever the banks are selling. And I'll just ride the waves that they create in the market. And that's how we stack odds in our favor. But again, there's many different strategies out there. Whatever you find that works, it's all about the discipline, the commitment, following rules, and the mental psychology to execute your trade plan and stick with it. And then the last one, every moment in the market is unique. No 2 days are alike. That's why trading is so fun. Can it be boring? Yeah, it should be boring to a degree because you're doing the same thing over and over. However, again, no 2 days are exactly alike in the financial markets, especially if you're trading multiple asset classes. If nothing's going on over here in the stocks, all right, well, let me go over to the futures market. If nothing's going on over here in the futures market, I want to take a trade over. Maybe I'll do the foreign currency today, or maybe I'll do a cryptocurrency. Hey, it's the weekend. I can trade those over the weekend. So it's great to be diversified in the markets, and then you'll definitely experience all kind of market conditions in your journey. Now, there's a Bible verse that reminds me about having faith in your trade plan and faith in, you and your set of rules, not the markets. Without faith, it's impossible to please him, meaning God. For the one who comes to God must believe that he exists and that he proves to be one who rewards those who seek him. And that's from the book of Hebrews 11:6. Do we know what's going to happen from day to day, guys? Do we know if today is going to be our last day on earth or the last day on earth for our family and friends? Ultimately, we don't. But over top of that world of uncertainty, and we don't know what's going to happen, as long as we place our faith in the Lord, who does know the future and who does know exactly what's going to happen from day to day, from second to second, we're good. That's putting our faith in and probabilities on him. He's our edge. God is our edge. Put, God in everything you do. Put him first. Have faith in him, even when you have no idea what's going to happen and you have no idea what you're doing. That's the best thing you can do to stack odds in your favor in life in general. So I'll ask you again, how do you personally handle uncertainty about being right or wrong? If you have an ego and you hate to be wrong, work on it. Because to be a great trader and investor, we need to be humbled. The market will humble you if you don't. And does uncertainty ever stop you from making important decisions that must be made? As a trader, even if I lose this trade, I need to press the button. If it meets my set of rules and my criteria, I have to execute, take action, be decisive, and press the button, regardless if I'm right or wrong, or if I win or lose. So hopefully then you will embrace that along your journey as a trader and investor as well. All right, that's the bite of wisdom for today. Thanks for joining me. I hope it's helpful and something to think about. And I'll check you guys out next time.
Thank you.
You're welcome.
Awesome. Thank you, Joyce.
You're welcome, Trey. You are
It's amazing. All right. So let's go into this. Okay, so let's think about our agenda for today. So we're going to talk about why we should even invest. Where can I invest? What skills are needed to invest? What assets can I use? And we'll go over some terminology, and we'll also do some Q&A if you guys have any questions. Okay. So the name of our company is Knockout Investing. We feel like that everyone needs to knock out investing. This is a part in people's lives where they're starting to ignore it. So why ignore it? Just put it on your to-do list and knock it out. Let's knock out investing. Let's get it done. So first and foremost, ask yourself a question. Why are you here? What made you show up to this seminar today? Okay. And the top answers usually are some people need to supplement their income. A lot of people are thinking about retirement. Okay. Do you have enough money for retirement? Or maybe you have a lump sum of money and you're worried that, hey, I need this money to last throughout my retirement. Okay. So how do I stretch this out for the next 20, 30, 40, 50 years, right? Some people want to switch jobs, or maybe you want to quit your job and find another job. So maybe making money from home may be something that you may be interested in. And a lot of people come because they hear of cryptocurrency, like, well, what is this cryptocurrency thing? And it's actually the birth of a brand new asset class that was not here before. So it's this whole new, totally new monetary system type of thing that a lot of people aren't even paying attention to. So what is that all about as well? So we can dive into some cryptocurrency. Okay. So it's three main rules to profitable trading. Okay. And the number one rule is we need to stack odds in our favor. It's only two things that you guys can do in the market. And what are those two things? What are the only two things you can do in the market? Anybody?
You can buy and you can sell.
That's it. That's it. You can't do anything else. But so it's your job to know when to buy, and it's your job to know when to sell. And the way you do that is you need to have a set of rules. Okay. So we want to have a proven set of rules that tell us when we should buy and when we should sell. Okay. And then once we have a set of rules that tell us when to buy and when to sell, then we have to have the discipline to follow those rules. So these are the three pillars pretty much to successful trading and investing. We want to stack odds in our favor. And in order to stack odds in your favor, you need to know when to buy and sell. Okay. You need a set of proven rules that tell you when to buy and sell, and then have the discipline to go ahead and follow those rules. So what we do is we use price charts. So the price chart tells us everything that we need to know to tell us when to buy and sell. All right. So the chart does not lie. I don't need to listen to the news. The only thing I have to do is look on my chart and find the areas where the banks and institutions want to buy and sell. And I just basically follow them because they move the market. So if I can understand, hey, big banks and big institutions are going to be buying and selling at certain price points, what I want to do is have my order in the exact same place as them, okay? Or close to it, right? Or close to it. And then I also want to use some type of risk management, because guess what? I may be wrong. So when I get into these positions, where am I wrong? Where am I proven wrong? What price point should I say, hey, I'm wrong, lick my wounds, and then look for the next trade or investment, okay? So ultimately, this is all part of a system, okay? So it's no one, part of a system. Like a lot of people think trading is just, I'm just going to come in, I'm going to buy something, and then that's it. Well, yes, that's part of the system, but understanding where you're going to take profits, understanding where you're going to get out for a loss, understanding your proper allocations for how much you want to invest in each asset is going to be all part of that system. And I'm just scratching the surface of a full system, right? So the key thing to your winning system is when I buy, do I have probability on my side, like Joyce said? When I sell, do I have probability on my side? Okay. So if you think of this, Vegas, they have all of these casinos. So we live a little north of Las Vegas now, so we can kind of see all the lights and everything all down. So we see all of these businesses. Okay. Now answer this question. Are these casinos making money or losing money? What do you guys think? How many people think thumbs up? They're making money, right? They're making lots of money. And why are they making money? Aren't they gambling? Well, when you go there, you have the player and then you have the house, right? But you would think that both parties are gambling. But if you really think about it, the house is really not gambling, are they? Because they have a proven system where they win over and over and over again. Because if you want to come into the casino and you want to play their game, you have to follow their rules. Is that right or wrong? Okay. So they have a set of rules that stack the odds in their favor. Okay. Now, if you go and play the game, they have dealers there, and those dealers have to follow the rules. For instance, if you're playing Blackjack 21 and the dealer is dealt 17, the dealer has to do what? The dealer has to stay on 17, right? He's not going to say, give me a hit, because they know statistically that, that they win in that predicament. So what they do is they allow you to take hits and you to take hits and maybe be undisciplined, and maybe you don't have a set of rules, okay? And they'll constantly win over and over and over again. That's what it is. Roulette, every other game. Every game they have the odds stacked in their favor. And of course, they're gonna follow the rules. How many times have you gone to the casino saying, hey, I'm gonna go here, I'm gonna follow rules, I'm gonna do this, but you just end up, giving all the money to the casino. And it works the same way in the stock market. You have professional traders and investors that are in here following rules and they're disciplined. And then you have, amateur traders, novice traders that's coming in. They just want to buy and sell, open up a Robinhood account or a stash account or whatever it may be. And no discipline and just hoping that they get lucky. Now, here's the thing. Can you consistently be lucky? I don't think so, right? There's no way that you can consistently be lucky. So we need to have some type of system. So why should I even take my money in the first place and invest it? Why shouldn't I just keep it in a savings account, okay? And just save my money, all right? Anybody looking to earn 0.001% on their money, right? And then I know you guys heard of how much money has been pumped into our economy. It's some odds like $7 trillion or something like that they've printed. So now, if you hold money under your mattress or you hold money in a bank account, but you have the government or the Fed, rather, not the government, the Fed printing money, that is devaluing your dollar. So every time they print more money, your dollar is now devalued. Okay. So what do you do? Okay. Well, there's three ways that we can get money to come into our lives. Okay. If you really think about it. We can go out and we can work for it. So I'll exchange my time, I'll exchange my labor for money. That's one way, right? Another way is I can invest. So now I'm going to buy something with the hopes that it appreciates over time, and then I'm going to sell it at that higher price. Okay, so that's another way. Then I could also get a gift. Someone could give me money. All right, and then another way I could get money is I could steal it. Okay, so I guess it's really four ways, but we don't want to steal money, right? We want to stick with the other three. Okay, so in our last meeting, Joyce went over some very interesting facts. So Joyce, you want to go over this the state of affairs again?
Sure, Trey. State of affairs. If we just kind of take a snapshot of how is the current system working for most people, the average American? What are their savings looking like? Is the only vehicle they have for retirement 401k? If you don't know about the 401k, there's a great book out called Unshackled. Really very, very, very informative about 401ks. Some stuff you may not know about, but anyway, we don't have pensions anymore like we used to. 401ks kind of replaced that. College degree not making a good return on investment. So, I mean, people hear the stats all the time on, spent so much money at college. For those that pursue their education, they finish and they go down the career track that they paid for. Awesome. But unfortunately, there's a huge chunk of those students that the money that they put into their education, they're not getting a return on it, right? How much money do you have saved in your account? Here's just a current chart about the American savings statistics. So right here, only 32% has about nothing, nothing saved. Most people they're kind of living from paycheck to paycheck, or, government check to government check these days. And if anything happens, any kind of emergency or setback, they're probably asking family and friends for help, right? Because they don't have emergency funds for themselves. About 26% have less than $1,000 in savings, and 15% only have 1 to 5,000, and so forth. Only about 10% has 50,000 or more in their savings. And again, can you really retire on, say on 50,000 anyway? No, not really. So the current system, I would say, is not working.
Yeah.
Are we a consumer-driven country? Yeah. Do we spend too much money? Yeah. If you ask Trey, does Joyce spend too much money? Yeah. Guilty. If I called in to Dave Ramsey, or what's the other lady, Trey, where people call in, can they afford something? What's your name?
Susie Orman.
Susie Orman. I would get yelled at. So just because I like to teach and help people what they should be doing with their money, I do it. I do try to do what's right. Do I fall short? Absolutely. I like to spend like the rest of them. However, savings is extremely important, and most people just cannot get ahead.
Yeah, and our workforce is getting older because of this too, right? So $50,000 is definitely not enough to retire on, right? So so here are your statistics here, Joyce, as well. So
yeah, so the average American household, which does not have a mortgage, it's not including mortgage debt, is over 132,000 in debt. That's crazy. The median household retirement savings for those aged 35 to 44 is around 40,000. Recent studies show that African American wealth is around 7% that of the Caucasian race. And I just have this in here again, because it is important. Whatever your ethnic group is, that's just another subset of statistics, right? And it's unfortunate, but it's reality. Can we conquer those statistics? Now, here's the 411 on the 401. Number one, you will not put in more than a certain amount each year, right? There's limitations on how much you can contribute. Now, hopefully you have a job where maybe your employer matches dollar for dollar up to a certain point. Maybe they only match 10%, 20% of what you put in. Every employer is different. However, you're still capped each year at how much you can contribute to your 401k. Number two, once the money is in your account, you can only invest in certain things. You will not put the money in where the IRS calls prohibited transaction. So say there's certain investments that on paper, hey man, these numbers are solid. And you have other solid investors that are making a great profit, but you're not allowed to do it in your 401k because the IRS prohibits you to invest in certain things. Seems pretty restrictive for your money, right? And number three, the money you invest will most likely be in stocks and bonds, and therefore subject to market volatility. If your retirement hinges on the volatility of the markets, usually the equities markets, right? Or even the bonds, that's pretty scary. I don't know if you know anyone that lost a lot of their, like more than half their 401k value in 2008, 2009. But I've come across many students that have. And it's very, very, very sad. And then they're not able to retire when they planned on it. So that market volatility is not really the best thing for risk management for your 401k, right? Number four, you will not withdraw any of the money until you're 59 and a half. This may be slightly different now in like 60, 62, but if you do, if you withdraw before you're allowed to, the point is you're gonna pay a hefty penalty, and you still have to pay taxes on the money when you withdraw it, right? So the government says you have to withdraw it by a certain age because they collect taxes when you do. Maybe you want your money to sit a little longer and to grow more in profit. But no, they have a lot of...
that puts you in a position to do that.
I'm sorry? Oh, hi, Chris. When you turn 72, you must start withdrawing a minimum amount determined by the government, whether you want to or not. And again, same thing, even if the person passes away and the family and the relatives have control over the 401k, same thing. They only have a certain amount of time before they are required by the government to withdraw that money out, hence paying hefty taxes on it. If you withdraw earlier, you will pay a hefty penalty. And number 6, when you take your withdrawal, whether limited to the RMDs or some greater amount, you will pay taxes on 100% of the money. This includes the money you originally put in, all the growth you've seen since at a rate determined by the government, a rate you can't negotiate. So remember, when you take taxes, when you withdraw the money at a later date, you're paying taxes at a tax bracket you don't even know what it's going to be. Doesn't tax laws change all the time? So it's talk about uncertainty. Talk about uncertainty. And if you think about the concept of money as a tangible asset, you should have full control of your money. And I don't know about you, but there's a lot of rules when it comes to 401k, greatly limiting your choices as an investor. And it's not really right. Zach Perry from the book Unshackled said a 401k is basically the government coming to you and offering to go into business with you. They say, you put up all the money, you take all the risk, and in 30
nothing
years,
else.
I'll tell you how much you owe me. Does that sound like a good business deal? In 30 years, I'll tell you how much you owe me. Wow. Yeah. And I'm not saying don't take free money. Again, if your company puts up and matches, take it. But should you put all your eggs in that basket as your only source of retirement savings? Probably not. Now, this has been getting a lot of attention recently, but because the numbers and the stats are just undeniable. Consumer student loan debt compared to other non-housing debt. Look at this. This is in the trillions of dollars right here. And this is the dates. This was from 2018. Student loans has surpassed any other type of loan debt. So you got credit cards down here, you got auto loans down there, other right here, and credit and student loans are surpassing them all. And this right here, again, the last several years has been very alarming to our economy. Again, student loans actually bypassed credit card debt. And look at mortgages. Mortgages are down here on this dark line. And here's auto loans and home equity line of credit. Why are student loan debt the number one source of debt? And this is a percentage of balance 90 days delinquent. So it's very hard for students to kind of keep up with these types of loans as well. Talk about a balloon busting. It doesn't look too good. The average debt among the common graduate degrees in medicine and health sciences, the average debt is over 161,000. For law, over 140,000, and so on, over 40, 50,000 for the other degrees. Type of stress, that's my daughter, you're on camera. Oh. Hey, Lily. The percentage of student loan borrowers unable to afford a $400 emergency is 41%. So again, when it works for people, great. But unfortunately, the system is broken for a lot of people and it's just not working.
Awesome. Thank you so much, Joyce. Now, so what's the solution here? We're not saying that people should not go to school and get an education and learn how to have a career. I think it's more important that once you get the money, what do you do with it? And I think a lot of people just do not have a system of what to do with money. It's kind of like money comes into my life and then it goes into my personal account and then that's it. Okay. And that's actually totally wrong. Like the money should really not even go into your personal account. That's a whole different class. But, that should not be the first step, is go into my personal account and then all the bills come out. And then whenever I have left, I have left. Okay. So once again, that's all part of figuring out a trading system. Once again, is what do I do with my money once it comes into my life? Okay. So one of the things that we have to do is learn how to make our money work for us. Okay. Before we spend it, pay yourself first. Okay, so I like to watch Shark Tank and Mr. Wonderful. He likes to call his money his friends. And he says he likes to send his friends out into the world. And then he wants his friends to come back with what? Who knows? With more friends. That's right. He wants his friends to come back with more friends. And if we think about that, that is an awesome display of what we should be doing with our money. We want to buy assets. We want to buy things that are going to appreciate in value over time. And that way we have more money. We do not want to keep our money in dollars, because what's happening is the dollars are just depreciating. They're flooding the economy with more and more dollars. And we want to have a way that we can grow our assets. Okay, so we want to buy assets. We're going to be able to earn interest on our money by maybe lending the money or staking cryptocurrency and things like this. What keeps bringing new and fresh money into my life. Okay, they actually call it earning rewards in the crypto world. If you do stake your crypto that you have, and you can get more cryptocurrency like that. It's called earning rewards. All right. So what kind of assets can we invest in? Well, everyone knows about stock. So stock has made lots of people very wealthy over time. So, you know, stock is probably one of the most common assets that people invest in. You're just basically taking your money and you're investing in companies. Okay. You can invest in Microsoft, you can invest in Apple, you can invest in, you know, Tesla and all these different companies. And not only can you just do stocks, but we can also do options on these stocks. So me and Joyce, we do a lot of options trading. We teach our students how to do options trading as well. Okay, so stock and options, they kind of go hand in hand, because remember what Joyce was saying, if you don't understand these assets, and let's say that you do have $200,000 or $300,000 worth of stock, and then the stock market crashes 50%. Okay, so but with options, I know how to protect myself. I know how to put insurance on my portfolio. Everybody has health insurance? Yes. Automobile insurance. You have automobile insurance. Okay, and then you have homeowners insurance. All right, well, how many people have portfolio insurance? You see, so this is a way where we can insure our portfolios. Okay, also we can hedge our portfolios against down markets. How about I know some of you guys are realtors and you guys rent, you buy houses and you rent them out. Is anyone renting their stock? Anybody know how to rent stock? Okay, well, we can teach you how to rent stock as well, where you're buying stock and now you're bringing in, not only are you looking for the appreciation of the stock, but now you have ways to bring in premium every month on the stock that you already own. Okay. Bonds, we could buy bonds. Now, these are more of a lower return, right? You're not going to get a big rate of return with interest rates so low right now. Okay. We can invest in commodities. How about crude oil or gold or silver? Okay. We can invest in these things through the futures markets. Okay. Forex, so foreign currency. So maybe if the dollar is in a downturn and dollar's going down, maybe we can invest in the euro dollar where the euro dollar is going up. Okay, because it's an inverse market. Or maybe we don't want our money in dollars, we want our money in pound, okay, or the pound dollar, things like that. So we also trade Forex, cryptocurrency, of course, Bitcoin, Ethereum, Dogecoin. So we trade all of those cryptos as well. Mutual funds. Now, I'm not a big mutual fund fan, but if you do have a 401k and you need to trade mutual funds inside of those, then that is something that you can do as well. Also real estate. So we have real estate ETFs that you can invest in as well. Well, I'm going to show you guys a little bit about that. So an ETF is an exchange traded fund. So let's just say you didn't want to invest in individual stocks. You just want to invest in a big basket of stocks like the S&P 500 or the Dow Jones. Okay, well, you can invest in a basket of stocks together called an ETF, an exchange traded fund. All right, and it trades just like a stock. So the bottom line is, what we want to do is we want to buy low and we want to be able to sell at a higher price. Okay. Now, easier said than done, right? And a lot of people, when they try to do that, they just kind of mess it up, right? Because they end up what? They end up buying, you know, maybe after a rally in price, because when you have a rally in price like this, the news will make it seem really good. The markets are up, you know, we just broke all-time high, you know, they give you all of the great reports and then you buy. Now, as long as it keeps going up, you're fine. You're like, oh my goodness, this is so awesome. Okay. But then what happens when the market goes down? Well, you end up selling because you're like, well, I bought this and now I'm losing money and I'm not going to sit here and lose my money. So let me get out. Now, the minute it starts going up again, what do we want to do again? Now we want to buy because it's going up again. And then next thing you know, right after you buy, it's like they're watching me and it goes back down. So you end up selling. Okay. And then as soon as you sell, it's like, you know, it goes back up. You're like, this is ridiculous, because every time it's like I'm on the wrong end. And the news is telling you, you know, that it's really bad, so you should sell, and you hear the doom and gloom, you sell your stock, it goes back up, you try to buy, and then to the point where you just give up because you just can't get it right. And it just seems like every time you buy, it's at the top of a market. Okay. And that's because it's designed like that. Remember, it's this system that is already out there for you to mess up. Just like Vegas always makes money over and over and over again, so do the banks and institutions. So we need to learn how to stack the odds in our favor by having a set of rules where we're not buying at the top of the markets, but we're buying when the prices come down into good areas where the banks are buying, okay? So remember, it's only two things we can do, buy and sell. So we want to buy at what we call wholesale prices. That's the bottom line. So how do we define wholesale? Well, I would define wholesale as where the banks and institutions begin to buy, okay? And usually that's after a big drop in price. Now, once you understand that you should buy at wholesale prices, the next thing to understand is we sell at retail prices. You say, okay, well, Trey, what is retail? Well, retail is after we have a big rally in price right before the market is about to turn over and then come back down again. And then you say, well, Joyce just said earlier, we cannot time the markets, right? Well, it's almost impossible to time the markets unless you have read the charts over and over and over again. And you have a set of rules that dictate when you buy and sell based upon the information that's left behind on the chart by the banks and institutions, okay? So what we do is we have a short-term bucket where we can do short-term trades. Short-term trades are when we get in and out the market, maybe within a day or a week or something like that. Now, that can be a way to supplement your income, kind of like going to a job and working, because now maybe you're doing these short-term trades every week or every day, and they help to bring in that short-term income, okay? Now, we can do day trading and swing trading there, and that can help supplement the bills and supplement some of your fund that you have, okay, in the short term. Now, once we have funds left over, we can start cycling those leftover funds into our longer term bucket, okay? Now, in our longer term bucket, we're looking for retirement and we're looking for philanthropy, and maybe even we want to leave some things to our kids, all right? Now, when you do your longer term trading, you can still do this investing inside of your 401k. You can even do this trading inside of an IRA where you can grow your IRA pretty much, tax deferred, and you can, either pay the taxes before you put the money into the account, or you can pay the taxes as you withdraw the money out. But the thing is, you're taking advantage of growing the money inside of a retirement account, all right? So we can do swing trading, and we can also do position trading over here. We can use options as well. We can use the futures market. We can use the Forex market. So we have these different markets that we can do for short term and also long term. Okay, we can trade stocks for short term or long term. We can trade options. We can trade ETFs, okay, inside of these different buckets. Now, notice earlier I told you that we don't want to just get our paycheck and then plop it into our personal accounts. So now what I'm looking at is brokerage accounts. So maybe I have an account at TD Ameritrade, or I have an account at Coinbase, and I have another account at maybe TradeStation or Robinhood. And now I'm not just sticking all of my money now inside of this checking account, which the money just gets spent once it goes there. It's like the black hole once you put the money inside of that account. Okay, so now instead of buying potato chips and renting a movie or buying some pizza, now you're like, okay, let me take this $140 and buy Apple. Now let me take this $120 and now I'm gonna buy Meta. Or let me invest, Twitter's under $50. Let me buy some Twitter. So now you're taking your money and now you're invested in these assets. And now you're not alone because you're with a group of people and a group of traders that are there to help you and support you, through this process. Okay, so that's the point of having a group and trading, because it can be very lonely to do the stuff by yourself and undecisive and not really knowing exactly what you're doing. So we can do that with cryptocurrency and commodities and futures markets and also Forex markets, because we're using the same rules and the same strategy, okay, with just different assets. All right. So now, when you look at this, you can do an allocation. So this is like the S&P 500. Okay, so if you think of the S&P 500, it's like a big old basket of stocks. And what they've done is they've taken individual stocks to build this S&P 500. So you could trade the S&P 500 as a whole. Okay. But if you think about it, what you're trying to do is the same thing. You just want to kind of build yourself a nice allocation of, stocks and ETFs in different industries and different sectors. Okay. Is what you're actually trying to do. Okay. So the key thing is when you diversify like that, it helps you to manage risk. And also we use what we call a stop loss. So a stop loss is when price reaches a certain price points, and we'll just get out and we'll call it a loss. And then we also have targets where when price rallies up to a certain point and we're okay with taking profits, maybe we take 20% profit or 50% profit based upon the rules that we designated for that particular trade or investment. Okay, so we only want to have small losses relative to your account size. Okay, so we have rules to define what we consider a small loss. Okay, and we want to have big winners. Now, if I have small losses and big winners, it allows me to actually lose more than I win. I could trade at 33% profitable on profitable trades and still have a really nice trading career. Just like a baseball player bats 3,300 and he is pretty much like in Hall of Fame. Okay, so the key to this whole trading and investing thing is small winners and I mean, small winners, small losers and very, very large winners is what we look for. Okay, so now how do we do this? Whenever I'm gonna buy, I'm usually buying where I believe the market is gonna stop falling. Okay, meaning I'm buying stocks and I'm buying cryptocurrency and I'm buying things after a big drop in price. So you can tell like over the last few weeks, the market has been going down. So I've been looking to acquire positions. Okay, right where I believe it's going to stop falling, turn around, and then proceed to go up. Okay, and then once I buy it, the next question I ask myself is, how far is it going to rally? And that way I know where I want to take my profits. Now, do I know the market's going to stop rallying and it's going to turn? No, I don't know anything, but I'm just using my process and I'm using my system to tell me where I want to buy and where I'm going to sell. But the markets are kind of unpredictable, but they are yet pretty predictable when you know what you're doing. Okay, so where's the market going to stop rallying, turn around and fall? We call that our retail area. Okay, so we use technical analysis. So let me kind of go to the charts for a second. I'll give you guys an idea of what I'm saying. So we use charts. Okay, so we look at candlesticks on the chart. So I'm going to now go to a chart and give you guys an idea of what it means here. Okay, so here is, let's use Bitcoin for instance. Okay, so I'm going to go to a daily chart here. So if I say a daily chart, that means that each one of these candlesticks, they represent one day. All right. So if I'm looking at this Bitcoin chart, and let's look at this last rally and this last drop on Bitcoin. Okay. So I don't know if you guys remember back here. So let's just go all the way back here. Okay. So Bitcoin had this really big rally up to about 64,000 or so. Okay. Now, of course, around this time, where I'm telling the group like, hey guys, this is a great time for us to maybe take some profits. We had a nice run up on Bitcoin. We could take some profits. And if we take profits, we're going to be looking to buy Bitcoin again, back down here at 30,000. Okay. Now the thing is, in the group, even when you've been doing this for a while, you're like, wait a minute, Trey. You're telling me that we're going to sell our Bitcoin up here at 60 some odd thousand. And then we're going to buy it back at 30. That's what you're telling me. And I'm like, yes, guys, because that's what the chart suggests. That's not what I'm saying. That's what the chart suggests. Okay. So no more than, all right. So we're right around, when is this? April 15 or so. Okay. Would you believe by May the 20th, we're sitting down here at 30,000. Okay. So now just imagine you did this. Okay. You bought down here at around, 30, 40, 50, whatever it is. You took profits at 60, and then you were able to buy back at Bitcoin at 30,000. Okay. So you had a chance to buy it here, or maybe you had a chance. Oops, sorry, I messed up my line. Or maybe you had a chance to buy it here. Okay. or maybe you had a chance to buy it here. So all three of those chances were right around at 30,000. Okay. And that's what we did here at our group. Okay. So one Bitcoin, 30,000. Now, remember, you do not have to buy a whole Bitcoin. Okay. You can buy up to a millionth of a Bitcoin, meaning if you wanted to buy $100 worth of Bitcoin, you could buy $100 worth. You could buy $50 worth of Bitcoin. So it would be the equivalent, so it would say like, so if you bought a tenth of a Bitcoin, it would be 3,000. If you bought 100th of a Bitcoin, it would be what? $300. Does that make sense, everybody? Okay. So you don't have to buy a whole Bitcoin. That's the part that I really want you guys to understand. Now, let's say you did buy a whole Bitcoin though. Let's say you bought a whole Bitcoin at 30,000. Then Bitcoin rallies back up, to our retail line right here at 66,000. So that would be like a quick $36,000 play there. Okay. So that would be a really nice trade. Now, here was our other wholesale area. So if we bought at 30, okay, and then it rallied up here, then we said, okay, another wholesale area was here at 40,000. Okay. So that gave it. So if you missed the 30, then I put up this wholesale area at 40, which price came back down to 40, giving another chance to get from 40, up here. Okay, so that's all I do. I just kind of come down and I pick these wholesale areas. So the last wholesale area I had right here was around this 57, which made it go up to the 66. Okay, so now we've come back below 50,000. So right now, I would rather wait for the 40,000 again. Okay, so now we're waiting for 40 again. All right, so that's what I mean about buying at wholesale prices, and then we're looking to sell when it gets back up to the retail areas. Okay, so even if we look at the, now, once again, I'm not a financial advisor in any way, shape, or form. I just find the patterns on the chart and I teach you guys how to follow the patterns on the chart is what we do. Okay, so let's look at this here because we can look at the same thing here on the NASDAQ this week. Yeah, so this NASDAQ play was really good this week here. So we can see we had this big drop. Now, keep in mind, I had this area here since November, November 1st, something like that. I had this yellow box. So that's what I do. I make these yellow boxes and I put them there. And that way the group knows when price drops down to this box, that's where we're looking for price to stop falling, turn around and go back up. So at this point, I'm looking for the market to rally because we already, we've come down to these low prices. We had a nice retracement of about, let's see here, how much did we retrace? So from here to here, we had a nice 7.33% retracement in the NASDAQ. So to me, that's a nice discount. And then now we look for price to bounce back up. And then we can sell once price rises back up to maybe about the 16.5 or so. Okay. And if you guys were here last month, you already saw I had this level last month as well, right? Okay. And then we'll do the same thing here for the S&P 500. So you can see the wholesale areas here that we're looking at. Okay. So last session, I told you guys that this was the FOMO wholesale. That's the fear of missing out. So sometimes you have these areas where you want to buy it because you don't want to wait for the big drop. But see how if you would have bought it too early, how price went through. Now, it did have a little rally one day, but ultimately, it still wanted to come back to the real wholesale area. So I just call that the FOMO wholesale because some people don't want to wait. They're like, man, I want to get in. It's not going to go back that far. So if you feel like you're going to miss out, then you end up buying a little early, okay, on that first red candle, okay? So we do more markets. So these are like the major markets. I look at these every day pretty much, okay? The S&P 500, NASDAQ, and the Russell. And then also we look at the Forex market. So right now we're in this euro dollar trade long. So we bought the euro dollar. We waited for this one for a long time for the euro dollar to get below 1.125. So we just bought it this wholesale area here. Oops, I just messed up my thing. Hold up. Get back. All right, so we just bought down here at this wholesale area. So this trade is working out pretty good. So you can see that when it got here, it turned. We had to wait a long time for that to drop down to here. Okay, so now we bought it. And now we're looking for it to rally back up. So it's kind of been coming back the last couple of days, just a little bit here. But we're looking to get way back up here. And you can see the short position from here looking for price to move from here down. So you can also make a profit when the market goes down also. Okay, so this was the short coming down, and this is the long looking for it to go back up. So that's what we do. Okay. So we also look at the crypto markets as well. So this is Litecoin. So Litecoin below 200 is actually a great deal right here at 150. So I'm looking for Litecoin to move from this 150 area back up to 300. So that's a double your money right there if that works out. Okay. All right. So we find these areas on the chart, guys. We're not going to get into the detail, of course, of how to find the areas today. I just wanted to give you guys an intro of our group, kind of give you guys a chance to understand what we do. And then last but not least, give you guys a chance to ask questions if you do have any questions. So now would be the time to ask questions.
This is Eric speaking. I have a question. Thank you for your presentation, by the way. I was in and out a little bit. So how exactly does your program work? Is it like a monthly class that people participate, they pay a fee, and then they get the education, or is it a different type of educational platform?
Yeah, so we're gonna it's gonna be on the website. We'll have the various classes on how to find the zones and stuff like that. So that will be what we charge for. Right now, I am not charging anyone. I'm just opening up the room in the morning, and you're welcome to join us and to kind of see how it works. And then once you want, like, okay, Trey, I'm seeing these zones working. This is awesome. I really want to know how you're doing this. I'll put the content up to kind of show you how to do it, and and then you can learn for yourself if you want to do that.
Cool. Thank you. That's really great. And then what happens when what do you recommend for a person in terms of participation if they're really busy with their full-time job and their business, which is what my case is. I want to invest in money like this, but I just don't have, a lot of that freedom or time, for the next year, I think.
So if you have at least 2 people, so what I want to do is, if you have at least like two to three people that are in a group, and you guys want me to coach you on your time, I can work something out like that. Because I know a lot of people they want kind of like that coaching, but as far as just for my own one-on-one training can be kind of, I don't want it to be trade advice. So 1 to many is fine as far as the SEC is concerned. So if I have 2 or 3 people to work with at a time, then I can work with you guys like that on your schedule. So I'm flexible on the training. So right now we just have the 6 o'clock in the morning sessions that we're doing, and Justin posts those sessions, some of them that we do. So that can give you kind of an idea of at least that market overview that we're doing. If you just want to look at those, then in the future, if you're like, hey, Trey, you know what, man, I really want some coaching. And I have a friend here that wants to do it with me, and then we can discuss the costs, and and then I can kind of teach you like that if you want.
Yeah. And also, Eric, that's a really great question, because I think that's one of the number one issues with people, that they want to do it, but they still have their life. Not everybody is fully retired when they want to invest. So that's why we have our short-term trades and swing trades, and then long-term. So there's some traders where they're only doing a couple trades a month, maybe doing 1 or 2 new investments a month. So everyone's times that they're available to be in front of a computer to do an analysis, there is different styles of trading that does not require you to sit in front of the computer for hours every day. Maybe if you're doing Forex or you're doing crypto, you can do an analysis on the weekends, set up your the positions where you want to enter, you set the orders in with your platform to buy and sell. Once those numbers hit, then you're in, and you don't even have to be watching the computer to do that. So we do a lot of what's called limit orders, where you just program the computer where you want to buy and sell, to get in, to get out, for a loss, for profit. Once you set and program your orders, then you're done. You should monitor, you have it on your mobile phone and just monitor from time to time, but definitely styles of trading where you don't have to be in front of the computer a lot.
Yeah, Joyce brings a really good point. That's a lot of what we do. So just to kind of give you an example of what she means. So if we look at Microsoft here, right? So here's a chart of Microsoft. And can you guys see that Microsoft chart here?
Yeah, thank you.
Okay. All right. So let's say that we wanted to buy Microsoft, and so let's say I set this trade up where, and it's going to be a little bit before price gets here. So let's say we were looking to buy this at around 298. So let's kind of do this. Okay. So it's a couple different ways where we could go about this. We could do options on it where I could obligate myself to buy there, and I could receive premium like tomorrow morning just for wanting to buy here. Like I could literally put money into my account just by saying, I'll buy this if it gets to 300. So these are some of the things that we teach the class. Like if you're willing to buy at 300, you can get paid for that today. Okay. Even if it never makes it to 300, you get to keep the money. Now, let's say that I did just want to put the order in right now to buy at 300. What Joyce was saying is we could just do a limit order where we could come in and we could just say, okay, give me a limit order for, at 300 to go in and buy that. Then I could even say I wanted to put in a stop and target where I could put a stop loss and say, well, if the price gets to 290, I want to get out. So I could say, if it gets to $290, I only want to risk that $10 and that could take me out. And then I could also say, if it gets up to, let's say, $500 or whatever, I want to get out at 500. So now what I've done is I just set a whole bracket order, which means if it gets to 300, I want to buy. If it gets to 290, I want to sell. If it gets to 500, I want to sell. And, let's just say I did that and I wanted to practice with one share just because I'm new and I just want to, risk $10 or whatever. So the worst thing could happen in this trade is I lose $10. Okay. And then I could just go in and hit place order and then place that order. And then it would be, the order would be in. So that would be the order confirmation. Okay. So,
quick question. This is Deanna, really quick. I know I'm traveling. I'm trying to drive and listen at the same time, but I do see that you are recording this. Is the recording going to be available or no?
Yeah. So Justin, we can make that available, right, Justin, for Deanna?
Yep.
Yeah. So Justin can make it available. He usually chops it up a little bit and then post. So if you want the whole raw footage, then send Justin an email and I'm sure he can send you the link.
Yeah, I'm traveling from Malibu, so I might cut out. I might lose you. So, and
Okay.
I really want to hear the rest of this. But are the 6 a.m. Calls available for us to be on?
Yeah, so we can send you a link to it. Okay.
Would you please do that for me too?
Do you want to post
Yeah.
the link in the chat maybe, Trey or Justin?
Yeah. Let's see.
Yeah, I know how to get in contact with Justin. So are there 6 a.m.s? Are they every day?
Yeah, so that Monday through Friday. Every day that the market is open.
Okay, got it. All right, yeah, I'll be on the call tomorrow then.
Okay.
Is
All right.
it
That sounds
6
good.
a.m. Pacific time?
Yes, 6 a.m.
Yes.
Pacific. Because the market opens at 6:30. So we like to get in and get our bite of wisdom from Joyce. And then I give you guys a nice little market overview. And it's some positions that I manage with the group that we've gotten in together. And we, some positions that I manage to kind of show them what I do in those positions and stuff like that. Because one of the things with learning how to trade and invest is, when some people just give you signals, say, hey, get into this, get into that, and then it's no follow through to see kind of like how those positions work out. And, how would a professional investor handle this and how would I handle that and stuff like that. So that's what I like to show the group, not just the winning trades, but how I manage losing trades and stuff like that as well.
Yeah, that's very important. Okay. All right. I'll be on the call tomorrow. Thank you.
All right, Deanna. Yep, no
Thanks,
problem.
Deanna.
This is Violet. I'm interested too.
Okay, so
Awesome,
let's get Justin, do you have the link to post?
Yeah, I'm gonna put it up right now.
Okay, thank you.
Awesome.
Yep. And any other questions that I can answer for you guys? Any stocks you want to look at or anything like that? I can do that too. It's up to you.
I'm interested in how to invest in crypto, and I'm doing a little bit of it, but I don't understand it. I'm just
Okay.
kind of doing it in a blind way.
Have you bought any crypto already?
Yes.
Okay. And what platform did you use to buy it?
Okay, so the the Venmo and Cash App has the ability to people they allow people to buy crypto there.
Yes.
So I have a little bit of there, or Bitcoin.
Okay.
And I have an account somewhere else that I have a passcode and everything, and I have a little bit of investing. It's not big, but just a little bit. But I understand a little bit, but I really don't know what I'm doing.
Okay. So the thing to understand is when you trade through Venmo and you trade through Cash App, you're actually trading on that ledger. So technically they're giving you, how can I put it? Technically they're saying that you have Bitcoin, but you don't really have the Bitcoin, so to speak, right? But they owe you Bitcoin. Put it like that. They owe you Bitcoin.
Yes.
So now if you decide to take your cryptocurrency off of their ledger, then that's when you would actually get your Bitcoin. So when you want to have your Bitcoin, really, you want to have what's called a wallet, right?
I have one. It's called Trust. I did it once, and I have no idea how I did it, but I did it.
You're not alone, Violet.
Okay.
There's a learning
I know.
curve.
Okay, but
That's
so
why I need help.
okay, so you it's called the software wallet, or you can have a hardware wallet. The hardware wallet is.
I have a software, and
Okay.
I have a little bit of Ethereum, and I bought a little stake. And don't ask me how I did it, because I wouldn't know how to tell you how.
All right. Now, so that's the one thing that you want to do is figure out, if you're gonna put some of this on your hardware wallet, which is the best place. And they have like these little the Trezor wallet. The Trezor is one, and then the other one is the why is it losing my mind? What's the one we
I
have?
forget the name of it.
The Nano wallet. Okay. So those are really good hardware wallets. Okay. Now, and then and you're doing it right. Other than that, I would say that I would say that if you're buying the crypto and you're keeping it on the exchange, that's okay. But it's gonna, like, Bitmart just got hacked, right? Now, they're not saying that anybody lost any money, but that's just the risk that you take when you leave it on the exchange, okay, as opposed to transferring it to your hardware wallet. Okay. So so we can discuss stuff like that in the room, stuff like that, how to transfer stuff to your hardware wallet, or recommend videos for you to watch and stuff like that as well. Okay. Now, what we look at mostly to get information about crypto is the main hub is CoinMarketCap. So coinmarketcap.com probably could be your hub to get most of the information that you need on crypto. So when I go here, this main screen here, kind of ranks everything by market cap. So you can see right now, if you were to buy Bitcoin, you're getting an 11% discount from over the last 7 days. So buying it under 50,000 was a really good price for a while. So that's what I mean by buying when these markets go down instead of buying when they're up. So you just had a nice opportunity to get, some people were getting it for like 41,000, stuff like that, right? When you have these dips. And same thing for Ethereum, had a nice dip back down. Okay. Now, if you want to be safe, you can stay within like the top 10 cryptos by market cap. Okay. If you want to go to the top 15, you can go like to the top 15. And the thing that I like about CoinMarketCap is when you click on whatever symbol you want to look at. Let's say that I want to look at Cardano. I could click on this, and then it'll give me the white paper. The white paper explains to you about the cryptocurrency, what the project is. So what is this project? You read the white paper to get the information on the project. Now, as a trader, you may say, well, I don't really care about the white paper that much, and I get it. But if you are interested in the actual project, you would read the white paper. Okay. And then if you want to know what exchange it trades on, then you would scroll down here and then to show you the top exchanges where you can buy and sell that particular crypto. So this one trades on Binance and Coinbase. Okay.
Okay, and how, so what programs do you offer to someone like me that wants to learn more about this?
Yeah, so like I said, I'm not charging you anything right now. You can just welcome to come to the 6 a.m. sessions that we have. You just feel free to come to the link, and it may seem a little fast paced at first, but once you start coming, you'll get used to it. Okay. And then and then, like I said, if you want more additional training or whatever, then I'll be making stuff and posting things, and we can discuss different programs for you in the future.
Yeah.
Okay.
Hopefully,
So
hopefully in the first quarter of next year, we anticipate rolling out the curriculum available for people online, and people in our group kind of just has that, priority access to it first. A lot of value to it, and for different levels of wherever you're at. So we'll get into that more next year, first quarter of next year.
Okay, great.
Yeah. So right now everything's free. So you guys get me Q&As, all of that good stuff, just for being one of the first people. Okay.
Your sessions are on Zoom?
Yes. So the sessions are on Zoom. Yeah.
Wondering.
But we've linked this one to YouTube Live. So Justin is my IT guy. He's hooking everything up to go through different mediums as well.
And we got YouTube, Instagram, TikTok, everything, man.
Like, subscribe.
Now, and this was something special too that I told Justin I would do for realtors, right? So one of the things that that I know you guys want to know is when the market, is when the market's gonna turn over, right? The housing market. So
exactly.
I hear you, Kristen.
So if we look at the 2008, right? So let's go back to 2008 for a second here, okay? And let's see. Let's go to this is a weekly chart. That's good. So let's go to monthly chart. So monthly chart, monthly. Okay. And then 2008. So here's a 2008 drop here. Okay. Now this is a monthly chart of the S&P 500. Get over there. Okay. And you can see that we had this big drop. And that drop was about 57%. Now, if we look at IYR, this is a real estate ETF here. And if I do the same thing, go to a monthly chart here, and you'll be shocked to see that, look at what happened with IYR around that same time. Okay, so this is a really good indicator to let you know when the market wants to kind of turn around. Now, if we look at this and we say, okay, well, price has been back up to these areas again. So you had that little crash right there in 2020. That's COVID. But right now, it's no signs that this market wants to roll over. Okay, but this will be the indicator that I would use to let me know when that market wants to start to roll over. So I would say as long as the price of IYR stays above here, right around that 101 and a quarter, something like that, then you still have a strong real estate market. Okay, but if this thing starts to come down and we break this 101, then the real estate market is starting to show weakness.
And IYR is an ETF that has actually a lot of commercial real estate in it as well.
Yes.
Dealing in the down.
Yeah. Now, another good indicator is XHB. Okay. So now this is the S&P home builders. And once again, no real sign of weakness. I mean, you had it drop down right here, a little less than 10%. Okay. But I would say the same thing until you start seeing red candles coming down on this, I think you still have a pretty strong real estate market. And on this one, maybe I would want to see a little bit more of a fail. I would say this one is still strong above 70. So if we see this come down and it starts breaking this 70, then that's when you're looking at a big drop. And this one looks like it could drop a lot though, right? A lot more, because this could maybe come all the way down to this area, maybe like this 58, something like that. And that'd be another really good indicator that the market is starting to weak. But you can see that the real estate market is still really strong. You still have the home builders are strong. You still have IYR is strong. And here's the thing though, let's say that you do put some insurance using IYR, or you short this, or you buy puts or something like that. If the equity in your home starts to decrease, but if this drops 50% or whatever, and you can make a nice profit on IYR and XHB, that could be a nice hedge on your equity loss in your homes, right? So, that's how I like to look at it as well.
While you lose money.
Huh?
So you can make money while you lose money.
Exactly. That's what a hedge is. That's what a hedge is. Okay. So you want to be able to hedge against that. So if you can, so just imagine that, when if we go back to 2008 here, right? So that's what we're looking at. So we're saying, okay, if we duplicate this, okay, and you can see that this was at 95 and it went down to $20. Just imagine being in this big short. Right? So shorting means you make money when this comes down. So if you use this as a hedge, so like I said, if we start to show these red candles and we start breaking down, even if you enter that here, after it starts breaking down, you take advantage of this, then you make a lot of money here, even though you lose that equity in whatever rental properties or homes that you own. So that's a great way to hedge that market.
And it helps to take that fear and that emotion. So if you have clients scared to death, over what's going on in their homes, again, just that, or in their investments, just that emotional roller coaster. I always like to map out, okay, if the market does fall, like Trey did, how far could it fall? So if it does start to do that, it's kind of predictable in a way, unpredictable, but yet predictable. And then it puts our mind at ease, our emotions at peace. We can think clear-headed and just take action on the best strategy for a bear market.
Yeah.
I like that. Clear head, because
yeah, because when you panic, we make bad decisions when we panic.
And once again, if you're wrong and the market continues to go up, so let's say you do take a bearish position, and let's say it breaks this 100, and you're thinking, oh, it's going to drop to 60, and let's say it pops back up, you can always get out. Okay, it's like I showed you guys how to put that stop loss on. Okay, so that's it. So I'm not going to keep you guys all night. So hopefully you guys learn some things.
Yes.
And yeah,
I'm interested. I think this could be so much fun if I learn it. I really like it, but I need help.
Yeah, well, that's what we're here. That's what we're here for. And once again, just be patient. It's one of those things where you're not going to learn it overnight. It's not like a overnight or a week or 2 weeks or something like that. It just becomes part of your life. Okay.
Yes.
And the more you interact with us and you get the lingo and we show you the charts, the better understanding. Right.
Okay.
So the people that are in the group now, they've been with me for about a year. And once you meet everyone, they're really cool and everything. And they'll tell you how it took them weeks and months before they really started to catch on. Okay.
Okay.
So,
great.
The good thing about you, Violet, is the fact that you just jumped in. Now, hopefully you jumped in risking little, right? It sounds like
very
you're keeping.
Yeah.
That's awesome. The students that take the longest to get it are the ones that listen and read and learn, but they're not doing. So it's those students that are getting hands-on, they're opening accounts, they're funding accounts, whether it's just simulated, which you should do in the beginning, right? Or just
Mhm.
trading with a little bit of money at risk, where if you lose it, you wouldn't even break a sweat or lose any sleep.
Yes.
And that's the kind of money that you should be risking, especially in crypto, which can be very risky and volatile.
Okay.
So I love the fact that you're just diving in there with a little risk, and that will greatly speed up your learning curve for sure.
All right. Oh, I'm so excited.
Me too.
Well,
I'm
awesome.
kind of impressed, Violet. Violet's my friend, and I'm like, wow, I didn't know you already had done it,
Yeah,
Violet.
she's staking stuff and everything, Kristen.
I'm
Yep.
so impressed. Yeah, you're like
Rolling.
ahead of me.
Well, I'm definitely ready to jump. I just haven't had time to jump.
It's all right.
So
Like,
I just need the pieces of the puzzle to make sure,
Yep. Yep.
yes.
you know, what I'm doing. So anyway.
That's a,
Ooh,
that's a
I'm so
good point,
excited.
Diana. We never find time for anything, right? We have to make it. So once we commit to making that time, whether it's an hour a day or something, then that's when the ball starts rolling for sure. But women
And it's
traditionally do well because we're
Just
very
curious,
conservative.
the 6 o'clock call in the morning, how long is it?
Usually an hour, but you know, sometimes I stay on longer, but you know, a lot of people have to leave by 7, so a lot of people are out by 7.
Yeah. Because of work.
Mhm.
Yeah.
Yeah.
So
All right.
it's the same
Okay.
link though. I'm just thinking about it. It's the same link that you used to get
Oh.
in here.
Okay.
Yeah. So use the same link.
I will definitely be there. It might not be.
So I'm just curious if people have been with you for a year, and let's just say me.
Hello. Oh, she dropped off.
We lost you, Deanna.
She'll jump back in, I'm sure.
That sounded like it was going to be a good question too.
I know. She's coming from Malibu.
I want to know the question. I want to know the answer.
Yeah, she's got that drive.
All right,
Okay.
you guys lost me. I'm sorry.
Oh
Okay,
yeah,
we
go
hear you
ahead.
now.
No, I was just saying.
I love it.
Can I go?
Yes.
Yeah, go ahead. What was the question?
No, my question was if others have already been with you for a year, and let's just say I'm jumping in now, there's already a learning curve. So I guess
Yes.
what I'm asking is like when I jump in now, where in the process am I? I mean, is this?
Yeah. Well,
I'm a little confused.
everybody's
catch
going to
up?
be eager. Everyone's going to be eager to help you is what it is,
Mhm.
right? Because they remember when they were you.
Yeah. We have a good group.
Yeah.
And we talk about fundamentals like almost every single session, Deanna, because if you've been trading 5, 10, 20, 30 years, the fundamentals should always be remembered and reminded and at the forefront of all of the rules. So we talk about rules, risk management, the fundamental principles, even when you're just getting started. Even though we'll go over trades and, you know, you might get a little lost in some areas, but you'll pick up a lot at the beginner level. Yeah.
Yeah, you'll be confused at first for sure though. Be okay with being confused, I guess, because that it will feel like that in the beginning.
Okay. I'll see you tomorrow.
All right, guys. All right, well, great evening. I will see you guys in the morning for those of you that choose to participate. If not, we'll have another one of these sessions coming up in January. So look out for it. All right, guys.
Thank you so much.
Thank you.
You're
I'm so
welcome.
excited. Thank you, Justin, for suggesting this. Love it.
No problem.
Cool.
Okay,
Thank you.
bye-bye.
All right.
right,
Good night,
guys.
everyone. Have a blessed
Good night.
night.
Good
Bye-bye.
night.
Thank you.
All right.
All
Bye-bye.
right, bye-bye.